sectorally, apart from autos, anything else that catches your eye?
In large caps, that's what I like. Cement looks good. I mean, that's been a favorite for a long time.
Okay.
So autos and cement look good. Other than that, I mean, they're very tepid, very tepid.
We'll talk about the smaller stocks in a bit, but before that, wanted your thoughts on this whole emerging markets play. This debate about India versus China. Most people tell us that China is looking a lot more attractive now. What would your view be?
I would tend to agree. I think China has lost a lot in the last 12 months' time. I think it's bottomed out. The other thing in China you must remember is that the property market is in a completely stratospheric zone. It's huge. It's almost like what the stock market was 12 months back. It's like a runaway bull market. Now they will try to cool down the property market. They already are. When they do that, that money will flow into the Chinese stock market because it's ultimately a seesaw between property and stocks. So that will provide, I think, a good upward momentum for the Chinese stock market because the property market there has just gone ballistic.
So it's not that India's share will move to China.
Look, I mean, if we look at the India weighting in the MSCI India is about 8% or so. China is about 25%. So there's just no comparison. We should not worry about our weighting moving to China and all that. I mean, our nearer competitors are more like Brazil and all that. China is like three times our size.
Okay.
Yeah.
So, coming back to that argument about the market up move, what do you see as the trend, say, over the next 3 to 6 months? Are we staring at some sort of consolidation in the market before an uptrend resumes itself? Because we do have many global and local triggers upon us, and they're not looking that good at this point.
They're looking terrible. So as I said, the only thing that I believe will propel our markets higher, or let's say two things. One is the big global sort of move towards emerging markets. Remember, emerging markets went through a tough time between 2010 and 15. It was a shunned asset class. When something is that beaten down, it comes back, and it has started coming back from this year. And this year, EMs in dollar terms, if you look at the aggregate, they have done quite well, I think about 30–40% up. So I think that momentum is enough to propel India as a part of an emerging market basket. And the second factor will be bond yields. I am not optimistic on earnings growth coming back and driving markets up.